Happy Thanksgiving to everyone. This is seems like a good time to take a quick look at the markets. We've got a little bit of a pause and gives us some time for reflection. As you know, I have two biases that color all of my podcasts. The first one is that the dollar is in trouble, and the second one is that the precious metals are a good place to be in lieu of a stable currency. So with that understood, I want to look at a couple of our charts and see what's gone on here just recently. Here we see a chart for 2009 and 2010 of UUP, which is the PowerShares US Dollar Index Bullish Fund. And you'll notice that we have our decline to this line. We have a rally. We have another three-wave, nice little Elliott formation type decline. And we have it starting to climb back out. The great quandary is with China and Russia claiming to move away from the dollar, instability in the Korean Peninsula, all the things that are going on, whether this little formation here is in fact bullish for the US dollar. And to be honest, I really just don't have any idea. You will note, however, that the stochastic is very high, and Williams %R confirms that. I don't feel confident enough to be a buyer of dollars here. I did try and buy some in this range. Sort of broke even on it, didn't lose any money, but may not have been my best strategy because it does run counter to my fundamental philosophy. Let's look at some other things real quickly. U.S. oil right here coming up. U.S. oil is based upon the stochastic, and the Williams %R is susceptible to an up move. We have something of a little uptrend. We certainly have some sideways action. In an unstable world, one would think that oil would go up. Would I be a buyer of it in here? I just don't know. I just can't tell you, but it is in an interesting position. Obviously, oil as a tangible, as a commodity, it's very hard to replace and very hard to do without. So longer term, it's probably a good place to be. Similarly, silver, having had its very strong run, is now doing this little sideways consolidation. I am going to zoom in on this. And you can see that this sideways consolidation has brought to a halt this long upward trend, but it really hasn't stopped the trend. It's just given it some resting time here. We're consolidating in price. I would expect to see, and I'm talking about measured in months, I would expect to see silver continue to rise. That's just an expectation, doesn't mean I'm right. There are the other investment forms, because SLV, of course, is the silver trust run by iShares, but there's SIVR, which is the ETFS Silver Trust. And there's also AGQ, which is ProShares Ultra Silver, which has a leveraged multiplier. The reality is we see, I think, continued strength. You notice this is more dynamic price action, probably indicating pressure on the shorts. You'll find plenty of places on YouTube to look up J.P. Morgan and see what's going on with the shorts. But I still think that this is a good long-term place to be because it gives you some safety and stability and predictability in the world where we don't have too much otherwise. I do want to point out two other, well, actually before I go to that, let's look at the SPY, which is the S&P 500 trust. We had this nice uptrend, corresponded to the silver uptrend. We have this consolidation while silver consolidates. In my mind, this is nothing more than dollar related activity. And the difference is I don't think we have an underlying quality to economics of this country, whereas silver and gold remain silver and gold. You know, we have about almost 900 banks on the FDIC's watch list for troubled banks. If you find the chart on that online, it is alarming how quickly it's rising. And those troubled banks, I think, are indicators of a troubled economy. We do not see improvements in unemployment. But if you go to Washington, D.C., where they're spending money like crazy, that's a little booming little city. Just got back from there. You wouldn't have any idea that there were economic troubles in the country. And I think that bubble surrounds our politicians and surrounds our bureaucrats, and they really don't get the degree of danger that's in this economy for everybody else. And look at QQQQ, which is, again, it's Power Shares Trust. It's a stock market surrogate. Same kind of basic pattern. Okay, well, we've seen enough of that. The last thing I want to point out is something I'm probably going to be buying, so I want to disclose that, but I believe that RJA, not that anybody, you know, if everybody who listens to this bought tons of it, it still wouldn't matter because there aren't that many of us. But here we have RJA. This is the Rogers International Commodity Index, and I think this is a good place to be. You notice where the stochastics is right now and where the price action is. I believe we're going to see some upward movement in RGA, and then there's RJN, which is a commodity index. This again is based on Jim Rogers' funds. This is this is energy, I believe, RJN. And again, similar formation. They did have a big up day here. So I think those are things to consider if you're looking for places to put in your money. I think it's good to diversify carefully. I do think basing in silver and gold is probably a smart thing, but it's never bad to look for other spots. For right now, I just don't see the stock market as being good, but other people may have other opinions, so I'd love to hear them if they do. Thank you. Have a good Thanksgiving. We'll talk to you next week. Bye.